If, like me, you hoarded Beanie Babies as a kid, clinging on to some distant rumor they might one day be worth millions, then you already have had a small taste of the world of alternative investing. An alternative investment is an asset that falls outside of one of the conventional categories, which are generally shares, bonds, and cash. The term is loose and could be applied to quite common areas such as property, infrastructure, and private equity, as well as more esoteric investments such as hedge funds, commodities, and even collectibles such as art, including digital art, classic cars, handbags, and even fine wine. The chief attraction of alternatives is that they should offer something different. However, the list of possible alternative investments seems to be pretty endless. The principal idea of if you don't understand it, don't invest it, tends to be a wise one to follow when it comes to the world of alternative investments. This also applies to other things that enthusiasts get involved in, such as rare coin collections, whiskeys, antiques, stamps, etc., etc. So experts in these areas might make decent returns, but for the uninitiated, it can be difficult to fully appreciate the market dynamics as well, of course, as the risk. There is nothing wrong with turning a passion or pastime into an investment opportunity or a side hustle. You might even have a real edge. But if you don't have knowledge, then it may be best to steer clear altogether. While there are good funds out there investing in alternative assets, investors should always be suspicious of more obscure areas, particularly when they sit in investment products that are unregulated. Investors should always be suspicious of more obscure areas, particularly investments that are unregulated. These could feature poor structures, high charges, bad governance, or they could even be scams altogether. There are lots of fraudulent traps for the unwary, and be particularly skeptical of unsolicited approaches. Always check two things. First, if a business offering an investment is regulated, and secondly, if the fund itself is authorized by the regulator. It is important to check both, as an authorized firm may be promoting an unauthorized fund, and investors in a fund that is not itself regulated would not benefit from regulatory protections or access to any compensation schemes in the event of any problems. You can check the regulated status of firms and funds for yourself using the FCA register available on its website.